Good day and a warm welcome to today's earnings call of the Iute Group AS, following the publication of the Q3 figures of 2025. I am delighted to welcome the CEO, Tamo Sild, CFO, Christel Kurwitz, and new in this round, CEO, Iute Albania, Akan Ajdini, who will speak in a moment and guide us through the presentation and the results. After the presentation, you will have the possibility to place your questions directly to the management. We are looking forward to the presentation, and having said this, Tamo, the stage is yours.
Thank you very much. I take over from now. Good morning, everybody. It's sunny weather in Tirana. We don't sit too often that close with Akan Ajdini, but today I am in Tirana. And Christel is in Tallinn, so we work in truly international mode. And we are happy to say that we have continued our growth, profitable growth. And if we look into better detail how we have grown and how your money is working for you and your money is safe, then today's focus I will put on the automatization and data processing and the effects of it, which we see now maturing, and we expect even more in the future. So disciplined growth with profit, and that based on data-driven decisions and automatization of the business processes in all value streams. And as you may know, we are making money in three major value streams: the loans, mostly installment loans, also by processing payments, which we call wallet, and also by intermediating insurances, embedding insurance products into other products, embedding insurance into our customers' daily lives by capitalizing, by monetizing our super app, on which we make the value proposition available to all Iute customers. So that in the very big picture, but now if we start our drill down, then I would actually go instantly to the biggest number, which is that we have the highest revenue achieved ever during the 9 months. And we are on the track to beat more than 120 million euros revenue on an annual basis. For 9 months, our revenue has been increasing by almost 10% to 91.5 million euros. And this has been driven by very good loan issuance. And also the revenue increase has been driven by selected loan issuance to the well-performing customers, because we also see significant improvement in loan repayment discipline. We also see significant improvement in the share of fully automatized loans. I mean, the loans which we issue to customers without a single human doing any single operation on the go. Usually from customer viewpoint, it is perceived as a communication over the super app that I want a loan, I want, and instant response, you get it, would you please sign? And if the customer signs, then that's the loan agreement, and the loan amount is dispersed to the customer account in wallet. We also see that there have been the increase or improvement in the operational efficiency. So the cost to revenue ratio has improved by almost 3 percentage points. And we also see that we are building our progress on a sustainable long-term funding structure. So that is the second layer that I would add to the big picture: disciplined growth with improved efficiency and improved profitability. But now if you go even deeper and start drilling down, then I would actually connect several points on the slide in front of you. So on the left side of the slide, you see the consolidated numbers of Iute Group, and on the right side of the slide, you see Iute Non-Bank and Enerbank separately presented with some key metrics. As a Iute Group, we have today we had by end of September 265,100 active customers. The number of people who pay for our activities, who pay, for instance, for this investor call. From the revenue, which amounted to 91.5 million euros, we made net profit of 8.5 million euros, which is faster growth. Net profit has been growing faster than the total revenue. Net profit growth 13%, almost 30% versus revenue growth 9%. And we see that also on the group view, the customer performance index, the overall loan repayment discipline, our cash flow metric, how many loans have been repaid on time or with maximum 30 days of delay out of the total that we expected during the given period, we see that the performance index has improved from 86.4 to 88.1%, so improvement by almost 2 percentage points. We see that the OPEX revenue ratio is at 36.5, so improvement by almost 3 percentage points. The share of fully automated loans in Iute non-bank is 32.7%, and again increase versus comparable period last year, almost by 9 percentage points. And the despite of the decrease of loans APR, which has gone down from 38.1 last year to 34.1 this year. So now I would like to connect the points. If you could just visualize that you draw a red circle around certain numbers, and the numbers, number one is net profit 8.5 and improvement. Then the second circle I will draw around OPEX revenue ratio 36.5 improvement. Third circle around customer performance index 88.1, and fourth around share of fully automated loans. So you see, like you get like 4 points, and I claim that those points are interrelated, and that is something between those points which connects them all and which gives a big result. And this is automatization and advanced data processing and deploying advanced data models, large data models, to make better decisions and to streamline the processes. So by applying more and better models in the business processes, and of course learning to use them, because there has to be operational engagement between the business and the data scientists and the engineers, by learning to deploy it better, we see that first we can achieve more and better results with the same operating expense. Operating expense has not increased, whereas the overall business has improved, has grown, and also has improved in terms of profitability. The same force has also driven the share of fully automated loans, and of course fully automated loans are cost-wise cheaper to originate and to maintain. The same force has driven the customer performance index, meaning that we issue more loans to more people, and we still get better repayment discipline out of the customers, so which affects our revenues and also affects our profitability. And that all ends up in the net profit. So those 4 dots are kind of interrelated, and they, I think, build the big picture. I would also like to address Enerbank here on this slide, because as you see in Enerbank, the share of fully automated loans is still at 0%, but we see that Enerbank has succeeded to grow its net loan portfolio, and Enerbank has also improved the yield of the loan portfolio by 0.6 percentage points. And in the progress regarding Enerbank, we see that there has been significant progress in streamlining the efficiency. So the process's efficiency still is visible in the group OPEX revenue ratio. There is also contribution by the bank to the improvement. We don't see yet the fully automated loans inside the bank. The current major challenge, which we will resolve, no doubt, as the rest of the country of Moldova and the banking system of Moldova, the major challenge is digital onboarding of customers. Today, in the banking system, to my knowledge, there is only one institution who has got so far permission from the regulator to onboard customers digitally without any physical face-to-face interaction. And we think that once the digital onboarding becomes approved, the bank will also start growing significantly faster, just because from customer viewpoint, it is a major obstacle to start using banking services, whether you need to come to the branch and do a lot of paperwork, or you can onboard and start using the digital services, become a digital customer without the need to visit the branch. So this is in the big picture. There has been growth, there has been improvement in efficiency, there is increase in revenues, there is improvement of profitability, and net profit grows faster than the total revenue, and we are ready to put in the next gear. If we look at the loan portfolio, then I would actually immediately draw everybody's attention to the gross loan portfolio breakdown by countries, where you see that there has been growth in Enerbank. Beginning of this year, 97 million euros to 105. There has been growth in Iute Credit Moldova, from 68 to almost 78 million. There has been growth in Albania, and Albania is now past 100 million euro mark. One of the reasons to have Akan here with us and to explain how the 100 million works and how the big picture works in Albania. We also agreed that you would talk free. So when you say something bad, I have to take it as criticism. We have had very intense past 2 days here discussing how to grow the business further and what are the next steps. Thank you very much. Oh, by the way, thank you very much to all Albania team for hosting us here and having those discussions and giving us the feedback. Always better to do it face to face. But screen to screen is also good. So we continue our investor presentation with screen to screen. Besides Albania reaching or crossing the 100 million mark, we also see very good growth in Macedonia. Thank you very much to Team Macedonia. From 39, almost 40 beginning of the year, and now we are past 51 million mark. And we see that we have kept the portfolio almost flat in Bulgaria. Bulgaria is a challenge for us, continues to be a challenge, but I am fairly optimistic based on the lessons we have learned that we start accelerating in Bulgaria as well. So in the big picture, portfolio has grown. You see the growth inside, country by country, and you also can compare the loan issuance in millions of euros. We have reached a fairly stable 109 million euros per quarter. And on the gross loan portfolio bridge, the only thing I would like to draw to everybody's attention is that you see very intense cash flow, cash in, cash out. You see the new issuance volumes on a quarterly basis, and you also see repayment volumes. You see how they compare, and this is just to emphasize the point that we are very much cash flow oriented, and cash is king in the lending business. So that's very important to bear in mind. Maybe not so important in good times, but it is very important if there are troubled times. And we have been, through our 17 years history, very adaptive and very resilient to different kinds of times. Now, if we look at the asset quality, then we see that there is very nice to look at a positive trend on the share of non-performing loans. Either you compare it to the net performing loans, net non-performing loans to net portfolio, or the same comparison to gross portfolio, we see a decline. We also see the cost of impairment to interest income, the share, while in 2024 through year, the share was 27.9%. Then in 9 months, 25, the share of impairments to interest income alone has decreased by 0.4 percentage points. So that's basically another way how to look how the credit risk impacts our bottom line. And we also see that the cost of risk has been in decline. So during 9 months, 2025, the cost of credit risk has declined to 7.9%. Maybe most important still, because we are cash flow oriented business, is the CPI, the Customer Performance Index. And here we see that there has been improvement in the overall portfolio, and also the newly or recently originated portfolio. If we just take a slice out of the grand total and look only at the fresh loans, we see that there is a strong positive trend. So if you take the long portfolio, big portfolio, some of the loans in the portfolio have been issued 2 to 3 years ago, so they are also in it. In the big picture, Moldova CPI has gone up from 89.6 to 91.8%. We also see that there has been improvement in Albania from 85.4 to 87.6, improvement in Macedonia, and in Bulgaria, in the long portfolio, it shows that we are still struggling, meaning that the loans that we issued maybe 2 years ago, 3 years ago, they are not contributing to strong cash flow, to sufficiently strong cash flow. But if you look at the recent payout, and I talk about last 6 months, then we see that also in Bulgaria we have strong improvement from 88.8 to 93.4%, and improvement also elsewhere. So maybe the message when we talk about CPI is that we expect even further increase of CPI, along with amortization of older loans, which take the Customer Performance Index down, and along with increase of relative share of newly issued loans, where we see customers performing even better than in the old loans. And also, if you look when customers default, and default in Iute language till today has been very, very conservative, even to the extent that we have had more questions from the regulatory side. Why are we not aligning to the standards of the overall banking sector? Why are we not considering loans as defaulted after 90 days? In Iute case, it's 50 days. And so on and so forth. So indeed, we have been very, very conservative, maybe too much. Maybe we will adjust over the coming year. Today, what we see, if you look at the default rate, and default again by Iute standards, by banking standards, the default rate will be much lower and much later. But by Iute standards, the customers who fail to make the installment within maximum 50 days delay. We see that the crucial installments are 1, 2, 3, and 4, maybe 5. After 5 months, it's pretty clear who is performing and who is not performing. You see that after month 5, the line becomes, the curve becomes quite flat. And the truth usually comes after first, second, third installment. So, I think this is enough from the big picture, and drill down what means profitable growth with discipline, and how we have achieved the results, and how ambitious we are in our growth. And maybe now I have taken all the space and time up, and you take over from here.
Okay.
And tell us something about Albania, how you see things.
I will also move to Albania slide then. I'll close this, right? So first, thank you to all of you investors for investing in Iute. Not a small part of your money comes to Albania, and we have made it work. We want more. We can make it work more than what we have, because in our targets for 2026, for example, we plan 25%, almost 25% growth of the loan portfolio. A few words about Albania, and then Iute Albania. Albania is a small country in the Balkans, 2.4 million population, GDP per capita relatively small, comparing to Europe, a lot smaller. We have an economy which is now being pushed a lot by tourism. There is around 10 million tourists coming to Albania per year, and this has fueled consumption. The whole country is growing, is like a construction site. We have also our challenges, so not everything is flower and roses. We are a developing country, but the big picture, I would say, for Albania is optimistic. and for Iute, it is even more. One last point about Albania: we aspire to join EU by 2029. Not far than 2 days ago, EU Commissioner praised us a lot as country for the progress we have made and said that it might even happen by 2027. Let's see about that. We are preparing for it. Now, when it comes to Iute Albania, we are 10 years in the market. When I started here, it was 8 years ago. I was just at the beginning. It was a small apartment, 2 rooms and a kitchen. But I was fine with it. Yeah, I was employee number 18. Now we are 130. And I can proudly say that now we are #1 player in the market when it comes to loans up to 6,000 euros. So we disburse the highest number, and we pay out even the highest number. We have total customer pool of 300,000 customers, including those who had the loan and those who now have a loan. Our assets are now more than 100 million euros, 101 million euro. And another proud moment is the fact that we are the most digital amongst, for sure, non-banks financial institutions, but also amongst many retro banks which are here. No one, including banks, have the ratio of 95% of loan agreements signed in a digital way. We have it. And the same thing for onboarding. No one amongst any of the players have this rate of onboarding, so 75% of onboarding happens digitally. The rest is physical because we operate also in shops with buy now, pay later. So this in Albania is about the 3 streams. We have loans, we have wallet, and we have insurance. And we are the country where all these streams are operating the most. About loans. As I said, I'll mention maybe last month, which was a record month. We paid out 11.5 million euros. This is the exact number. 11.5 million euros was the paid out of last month, and this was in 13,000 loans. Yeah. To be precise, sorry, 13.5 million euros, 13.5 million euros, sorry, and 13,300 loans. This is by far the highest number amongst, as I said, non-banks, but also banks, because we can have the data for loans up to 6,000 euros. We are the #1 buy now, pay later player in the country, meaning that in most of the shops we are there, but we want more. Because we are famous with mobile phones, we are famous with electronic shops, but we are not famous yet with healthcare or with fashion, which is the case of buy now, pay later in Europe. This is how we started there. So we aim growth in all these sectors, and until every dentist will have an option to offer his services or her services with buy now, pay later, we'll be asking for more. When it comes to wallet, of course, our market is not just internal. Wallet is a business which we launched 2 years ago in Albania. Now we have QR code payments, meaning that customers can pay for a coffee or for a service or a product with a QR from the phone. There is also ATM transactions, which are part of wallet. But what we want to go after is the Albanian diaspora, which we estimate to be around 1 million people living in Germany, Italy, Greece, and other countries in Europe. We aim remittance and FX with all these potential customers of diaspora, especially now when SEPA is live in Albania from last month. We are going to develop it and make it possible.
Albania is SEPA member.
Albania is SEPA member from last year officially, and practically. First transactions happened last month. So there is a lot of room to develop there. When it comes to insurance, again, I can proudly say that we are the only financial institution to have non-protection insurance fully digital journey. Up to now, everyone has it in papers, partly And again, there we see a lot of potential. Insurance is not being seen as a great opportunity from both insurance companies and other players. They relied only on mandatory insurance. So all of these areas have opportunities to grow, and we are eager. We asked Tarmo to direct most of his resources from the headquarters to us.
Well, that's always a fight, you know.
Yeah.
Who gets first and what? And
we think we should get first and most. Another element I want to mention is local funding. So around 17% of our total funding is local. And we have set some targets to ourselves to not borrow at more than 10% and not borrow as well at less than 3 years maturity. So now we stand at rates which are from 8 to 10%, and the outstanding amount is 11 million euros. I'd be happy for any question you'll have, and whenever you visit Albania, I invite you to visit Albania, also visit Iute. I will personally welcome each of you if you come here. And I pass now the word to Crystal, I think.
Yeah, I think we pass it over now to Crystal.
Yes, thank you, Tarmo and Allar, and good morning from my side as well. And let me briefly cover financial KPIs as well. So as Tarmo already said, total revenue up to level of 91.5 million euros. On a yearly basis, increase by 9.4%. At the non-bank side, total revenues up by 11%, and at the bank side by 3%. Extremely happy to say that on a yearly basis, insurance revenues increased by 68%. Adjusted EBITDA at the level of 37 million euros, up by 16.2%. And at the non-bank side, adjusted EBITDA increased on yearly basis by 17.3%, and at the non-bank side by 9.4%. And the main reasons to increase of adjusted EBITDA, higher level of revenues, despite the lowering APRs, and despite of the additional cost of funding, also including one-time cost of capex because of the early redemption of Frankfurt 26 bond. We managed to keep operational cost pretty much the same level as during 24. And as you saw, our loan book quality has improved, and based on that, allowances increased only slightly during the 9 months of 25. Net profit 8.5 and a net profit margin 9%. But as you all know, our aim is to see net profit margin more than 10%. OPEX to revenue ratio on consolidated basis at the level of 36.5, and as already said, we are extremely glad that our aim was to keep operational cost at the same level, to be more efficient, and based on the performance, you are able to see that we succeeded. Capitalization ratio dropped a little because of the higher funding cost, and at the end of the third quarter at the level of 23.7%. Leverage ratio is definitely one of the ratios we are not happy, but we see that the leverage ratio is at the level of 6.5 on temporary because of the delay of the settlement of Frankfurt 2030 bond. We were not immediately able to transfer fresh money to loan portfolio. But as also Tarmo said, as Hakan said, that during 9 months of 25, our loan payout extremely high, close to 300 million euros, which means that in the near future, we will see definitely a better performance of leverage ratio, as well as capitalization ratio and interest coverage ratio. Moving further, total revenue development. As already said, on a yearly basis, total revenue increased by 9.4%. Still, 91% of total revenues are generated from loan portfolio. 5% of total revenues belongs to wallet. And regarding Iute non-bank side, most of the wallet revenues are produced by Iute Pay Albania, but we are planning to go live with Iute Pay Bulgaria in January 26, and in Macedonia with Iute Pay Macedonia from second half of 26. As already said, insurance revenues are increasing rapidly, and insurance revenues are at the moment covering 5% of total revenues. Net interest income. Net interest income on a yearly basis increased by 3.5%. It is a slight increase, but as already explained, the main reasons behind higher level of funding cost during 9 months of 25. Still, the biggest portion of net interest income comes from Albania, followed by Macedonia and Moldova, and then the smallest portion from Iute non-bank side belongs to Bulgaria. But yes, we are extremely happy that the biggest jump regarding net interest income development was generated in Macedonia during the third quarter and followed by Iute Moldova. Net interest margin at Iute non-bank side at the level of 25.4, also small drop because of the higher cost of funding, and cost adjusted net interest margin at Iute non-bank side at the level of 13%. And as you see, at non-bank side, pretty much the same level, cost adjusted, not net interest margin 13.3. And if we move further, our operating expenses. As you see from the graph on the left side, on a yearly basis, operating expenses increased only by 1.9%. And during the 9 months of 25, consolidated OPEX to revenue ratio remained at the level of 36.5. As you see, at Iute non-bank side, we are quarterly basis are able to decrease the OPEX to revenue ratio. We have to admit that there was a slight increase at non-bank side, but we are working on it. And as said out loud, our goal for non-bank to keep OPEX to revenue ratio not more than 50%. Moving further to adjusted EBITDA. So as you see from the graph on the right side, the biggest impact to EBITDA development comes from revenue increase from Iute non-bank side. As already said, due to the better quality of loan portfolio, our allowances increased only by 1.6 million euros and OPEX increased only by 1 million euros. And moving further, assets and liabilities. At the end of third quarter, we had assets at the amount of 487 million euros. Still 83% of total assets belongs to cash and net loan portfolio. We had liabilities, 391 million euros, and most of them, or 34%, belongs to bonds, followed by loans and deposits in amount of close to 42%, and followed by P2P platforms of 12%. To sum it up, as also Tarmo pointed out, we have managed to keep and decrease OpEx to revenue ratio. We managed to improve loan book quality. We had extremely high level of payout, which means that we will generate higher revenues in the near future. So with that, I am confident that interest coverage ratio, capitalization ratio, and also leverage ratio will improve in near future. So, and with that, Tarmo, floor is once again yours.
Well, thank you very much, Kristel. Here from Tirana, when I was listening to you, I can only say that we are confident that the growth of assets will go past 500 million euros this year. And also, while I'm already with one hand picking the questions which are popping up on the screen, and we let our moderator take them one by one, I want to emphasize that in our cost base, there is one element which is driven purely by our own management, which is the money that we invest into new technologies, into new solutions, into new services, which are not yielding any revenue as of now. But we have decided to continue investing. We see that the investments we have made in the past are already making yields for the rest of the group. And here I refer to those 4 points that I mentioned before. The net profit, improvement in net profit, and increase of net profit faster than the revenue is not a thing on its own, but it comes from the improvement of cost to income ratio. And cost to income ratio improves because we deploy new technologies, new solutions, and we see their effect also in the improvement of the customer loan repayment performance, the CPI, and we also share their influence in the share of automatized loans, and we also share it. We also see it in the relative increase of wallet and especially insurance revenues. So there is more to be made, and just a number that I leave everybody for reference: the so-called discretionary spending, which we want to do, but we don't have to do if we don't want to. It's not necessary to keep the business going as is, as a strong ongoing business. The discretionary spending is approximately 12 million euros per year. So this is the comment. And now perhaps we start taking the questions. Which order and who will answer? Please guide us through.
Yes, we will do it like that. Thank you. Thank you very much for the dive into your numbers and the insights into Iute Albania. Ladies and gentlemen, it is your turn now as we move on to our Q&A session. For a dynamic conversation, we kindly ask you to ask questions in person via audio line. To do so, please click on the raise your hand button. If you do not have the possibility to speak freely today, you can also place your questions in our chat box as already happened. And we will start with the first question. Congratulations to your Q3 results and continued solid growth. 2 questions, please. One of your bond covenants is at the threshold. How do you plan to improve interest coverage, or do you expect to breach the 1.5 times level? And second, why is impairment coverage of the non-bank relatively low at 66.6%? Why not targeting 100%?
Tarmo, maybe I will give a feedback regarding interest coverage ratio. As I already said, that with growing loan payouts, we will generate more loan revenues. As you saw, still 91% of the total revenues are coming from loan portfolio, meaning that with higher level of payout, 300 million during 9 months of 25, we will definitely see a higher level of revenues in the near future, and that will automatically impact also interest coverage ratio. Regarding impairment coverage ratio of level of 67%, and why not 100? It is related to the fact that historically Iute has always collected after the default 35% from defaulted portfolio. So if you add up 66 plus 35%, then basically we are covered a little bit more than 100%. Thank you.
Thank you very much for your question. And we will move on. At which options do you look for refinancing the remaining outstanding 2026 bond?
Kristel, will you take that?
Yes. To be honest, it is at the moment too early to present concrete timeline, concrete scenarios. But yes, we are working on it. First, we will close our annual report of 25. We will finalize audit, and then early in next spring, definitely we will present already concrete scenario how and when we will start the refinance exercise of remaining 26 bond.
Thank you.
Maybe just to add, in the long-term group financing, we keep the Frankfurt listed Eurobond as one of the core pillars. And as you know, we have outstanding issue recently issued with a maturity of 2030 and with the possibility to tap more. So I think that this bond, 5-year bond, will be also one of the core pillars of the group's long-term funding. So this is part of the answer to your question without giving any particulars. Secondly, when we discussed the interest coverage ratio and being at the margin of 1.5 or meeting the bond covenant, but without nothing left to spare, I refer to what I said previously, that if we would stop investing into the technologies which qualitatively change the group's value proposition to its customers, if you would stop investing, the impact on an annual basis to probably our net profit will be maybe even 12 million euros. And we are not just lifting off the foot from the gas pedal. So it is 1.5 because we keep pushing and investing into the future.
And could you please explain again how the leverage ratio will come down over time?
Kristel, will you take it?
Yes. Basically, the same explanation I already gave, that with a higher level of loan portfolio, we will see a higher level of revenues, which also will impact adjusted net profit, adjusted EBITDA. Sorry. So all in all, that will also improve leverage ratio. Because as I said, we had delay regarding the settlement of Frankfurt 2030 bond. meaning that we were not able to transfer immediately the fresh money to a loan portfolio from the beginning of June. But yes, as I said, leverage ratio is high, we know that, but we see that in the near future, leverage ratio will improve.
And are Q3 funding costs a good run rate level for next year? That is around 11% level?
Yes. We may expect that basically, except the one-time cost from early redemption of 26 bond, which also impacted interest costs during the 9 months of 25. Then basically, yes, the average interest rate most probably will remain up to 11%.
How do you view the risk of breaching ICR covenant on the 21 to 26 bond before financing the refinancing of remaining outstanding amount?
As already said and answered by me and by Tarmo, so we are confident that we will not breach interest coverage ratio of 1.5, because we see that loan revenues are increasing, and as already said, 91% of revenues are still produced by loan portfolio.
Thank you, Christe. And we will move on to a person in our broadcast, Mr. Lehmann. You should be able to speak now. You can unmute yourself.
Yes, hi. Thanks for the presentation to the team, and appreciate also learning a little bit more about Albania. I like that 10 million tourists, by the way. I think that's pretty cool. And good luck to Albania. Tarmo, here's my question. I like your approach, which is different to other non-bank lenders, and which kind of consists of this vision that you build a ecosystem with your clients, not just lending, but also doing the wallets and the insurance and maybe other things. It seems, however, that on that transition into that fully working idea or concept, that you're kind of getting squeezed a little bit on the cost side, and also, of course, on the difficulty to grow revenues in your markets. You respond by bringing down your operating costs. You also look for better credit quality. Seems also that you try to increase revenues. But where are we on that? In your mind, where are we on that transition to this more integrated client relationship, where maybe the revenues from the clients, which right now are 90% coming out of loans, well, this might go down to 70, 50%. I don't know what your vision is here. Can you shed some light on that? That would be appreciated. Thank you.
That's a very good question. Thank you very much. It's also a broad question, but let me elaborate. So I think first point which you made and which you agree is that there are different forces which apply to our business at the same time simultaneously.
Right.
So that is the force of decline in the yields of the loans that we issue. Loans become more and more bank-like in terms of pricing.
Yeah.
And as I said, the APR is down over year-on-year comparative by 4 percentage points. So yield 38 has been replaced with yield 34, and that obviously affects the overall income. The loan revenue cannot go up unless you increase the loan portfolio, which brings the second challenge: how to bring up the loan portfolio without increasing the cost of risk, or basically giving the loans to the right people who will repay and who actually need the loan for a real reason. And then obviously this challenge you can resolve by applying more information technology solutions. That is the hype AI. It's not hype, okay, let me correct, but let's say there is a lot of lot of media production around AI, but we are also deploying different solutions, also AI-assisted or AI-automated solutions to address the question of how to increase the loan portfolio without increasing the cost of risk, vice versa, to improve the repayment discipline. So that's the force to counteract. And then there is, of course, the capital markets, and the capital markets who seem to treat all black birds in the same way. And so far, my efforts to explain that we are a black bird who is becoming, transforming into something else. These efforts need to be increased and continued. So indeed, we are not a simple lender. We are building an ecosystem. We are building a digital bank. And that means keeping the balance between those different forces, the decline in the loan yields, which you have to compensate with better operational efficiency, better loan quality. We have coped very well so far with it, but also by adding to the value proposition to the customer, so that the same customer pays us for different services. And we have seen progress here as well, because the average revenue per customer has increased by more than 20%. And at the same time, while doing all this, meeting also the expectations of the capital markets, especially the bond investors. And I am aware of the investor sensitivity to the very simple metric of interest coverage ratio. And again, we can still regulate it by telling to how much we, on an ongoing basis, spend money, because this affects our EBITDA, how much we spend money on new things, on new technologies. So it's kind of really keeping all the metrics on the dashboard, and then keeping it to the maximum that we can to grow faster and become faster the digital bank with most used in every country where we operate.
Mm-hmm. And do you see, because that challenge with the lower lending rates, that will continue, right? There's nothing on the horizon that will stop that. And to some degree, if you have better quality clients, you can also lend to them at lower rates, right? So there's a kind of a positive loop here. But do you see further efficiencies in your organization? I hear from the Albania colleague that he's basically saying, look, we grow by 20%, but it doesn't sound he's gonna bring the costs up by 20%. In fact, that's probably gonna be quite healthy growth, which he's forecasting, if I read his words well. So if I apply that to the whole company, this kind of, you will continue to see your costs at a level, they probably stay where they are. You try to bring up revenues in a shrinking interest rate environment, widen the revenues with clients. So you continue to see that, and you will deliver on that in Q4. Do I hear you right? And also in 2026?
Short answer is yes.
Mm-hmm.
We continue to see that and continue to deliver. But Hakan, maybe you want to add?
Yes, I want to add, because this is exactly one of our main challenges.
Okay.
And there are two main solutions for it. First is base growth. By the rates, by going down, mean also that customers more and more like the product because it's cheaper for them, mm-hmm. and the base grows. Mm-hmm. And as I said in the beginning, we are serving now much less than what is the potential. I'm talking for Albania. Mm-hmm. So there is a lot to be done in e-com finance, where there is very poor know-how, and we can do it. There is a lot to be done in buy now, pay later, and also in cash loans. Mm-hmm. And by adding all these customers, also quality we expect to improve, because these are known customers to us. These are repeated customers when they take second and third loan. So quality improves. For Albania, I'm optimistic, and at the same time, we are working with other income streams. And here the race is open, especially for the wallet. There are a lot of licenses given, but we are the only one which has the customer base. All the other e-wallets are, let's say, aspiring institutions, most of them, and they don't have the customer base. So in the big picture, bigger base, better quality, and other income streams are the key answer, and I think we'll make it happen. In the long run, we aim to become a digital bank, and if we do that, then the picture is completely different because we have a cost of funds much lower because we are allowed to take deposits, which the bank says now it's an offer at 2%. So very good rate.
Right. Of course,
immediately.
The deposit taking is a complete change of economics for anyone. But my last question to you, Tarmo, sorry, and then I finish. But reducing the investments, the capex, you indicated that you have a certain discretion here, reducing that and not continue to march on your strategic direction with this integrated ecosystem would of course be that would not be the right thing to do from my point of view, even if it would lift the interest coverage ratio by a small 1/10% or whatever that is. So you do have other options potentially to bring that up and generate extraordinary profits. So good luck on that, and we'll be listening in on Q4 in February, I guess. Thank you very much.
Thank you.
Thank you, Mr. Lehmann. And we have 2 questions left in our chat box, which are partially already answered, but I will read them out anyways, and you can add a comment. You mentioned that enact Bank's efficiencies and lending is currently being held back by regulatory issues on license for digital onboarding. Do you foresee that you could get the license next year? And could you give some sort of color on how do you see operating expenses developing for non-bank and enact Bank next year? Should we expect some stable inflation in non-bank for next year and perhaps some efficiencies-driven deflation at enact Bank? Or would both divisions be subject to OPEX growth?
In relative terms, we certainly are aiming further improvement in OPEX to revenue ratio. And that refers to the whole group and also to enact Bank specifically. Of course, the lower you go, especially if we talk about non-bank, the harder it is to make further gains. But as I already said, our share of fully automated loans is not yet 90%. I don't think we will be aiming full 100%, but even 90% will give significant gain on top of everything else. But now if I switch over to enact Bank, then in enact Bank, certainly the streamlining of processes is still ongoing. We see that the bank is profitable. It has been profitable through the period. It has been under our stewardship. And the bank's net interest margin is somewhere around 6%, slightly less than 6%. And despite of this, it has been profitable. So that's a good sign. And despite of the limited, rather small balance sheet size, the bank's balance sheet is somewhere around 185 million euros in total. So the digital onboarding is a precondition at foremost for the growth. To joining the market for digital services, that's the precondition. That's the first step. It's like going through the door. If you're through the door, then there is a field open competition, and one has to succeed in the real value proposition. But if you can't get through the door, then what separates digital customers from non-digital ones is that if the first step is that you have to go to the bank branch, that's game over. No more interest in whatever is behind. And if you can do the natural step on the go, that you can on your smartphone download the app, do the onboarding, identify, be approved after KYC, after thorough KYC, etc., that's a different journey, different customer experience. So the digital onboarding is precondition for accelerated growth. It might, to a certain extent, also improve the operational efficiency of the bank, but that's not crucial. It just opens the door to the new market and to new opportunities. And there was also a question whether we see when it will happen, when it will be permitted. Well, technologically, I believe we have been ready for quite some time, but there are regulatory processes. We understand that Moldova is also a country in transition, and there is a lot happening. So we expect the best, and as soon as it is feasible by the authorities.
Thank you very much. We're looking forward to it. And in the meantime, we have received no further questions. We therefore come to the end of today's earnings call. Thank you very much for your interest in the Iute Group AS. Should further questions arise at a later time, please feel free to contact Investor Relations. You can see the contact now on the slide that is open. A big thank you also to you, Tamo, Crystal, and Akan, for your presentation and the time you took to answer the questions. It was a pleasure to be your host today. I wish you all a lovely remaining autumn week. Greetings from Hamburg to Estonia, to Albania, and around the world. Successful business. And with this, I hand back over to you, Tamo, for some final remarks.
Thank you very much. And at foremost, our gratitude goes to our investors who trust us and who make their placement in us, into our bonds. I also want to thank our team for the excellent results. Team in Tallinn, team in Albania, team in Macedonia, teams in Moldova, in Bulgaria, and small teamlets elsewhere where we are working. So thank you very much. And also we have to be grateful to our customers who appreciate and who pay our bills and support our growth. Thank you, everybody, and see you next time.
Thank you.